You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, Real Estate Runway family. Today we have a very special guest, Mr. Beau Beery. He's a longtime commercial broker specializing in multifamily in the Florida markets. He's been in the game since 1999, been through crashes. He has some very unique perspectives on the market that actually agree with Quattro's perspective as well as what's going on today. So we're going to talk about, how you should position deals to sell if you're a seller, how to find the most deals in this market, how to have the best reputation with brokers, and the list goes on. We're going to have him back on just to finish the conversation. So without further ado, here is Beau Beery. All right, everyone. Today we have Mr. Beau Beery of Multifamily Advisors here to talk with us today a little bit about how to play well as a buyer and how to sell for top dollar. So, Beau, before we get into this, I'm going to try to rehash a little conversation we had, and maybe we'll be efficient with it, on this time around. But give me your thoughts on what's going on in the market today. And, do you see this being like the crash of all crashes because Disneyland of interest rates is gone, or what's going on? We were in the happiest place on earth with interest rates for the last 3 years,
I totally get it. So here's what I think is going on. So you've got, on the sell side, the owners of apartment assets are earning higher rents than they've ever earned in the history, right? Meanwhile, buyers are trying to create a tone that, that values are coming down, that the world's crashing, that prices should be accommodating to the interest rates, and they're just expecting people to have to sell left and right, and they're going to get deals, and it just couldn't be further from the truth. And so what's happening is the sellers that are calling me are sellers that are open to selling. They're not calling me and saying, "Hey, Beau, we're thinking about selling, like you to do a BOV. Want you to go out there and get us a big price. We'd like to be able to exit out of this by the end of the year. We're going to sell this for sure." That's not the conversations I'm having. What I'm having is it's usually me calling them right now, whereas before it was the other way around. And when we have a conversation, they are open to selling at a certain price. They are cognizant, all sellers are cognizant of what's happened in the interest rate world, but if they don't get their price, right, it doesn't make sense for them to sell because their rents are going up double digits percentage per year. So we just have this odd pause right now, which will break loose, but there's a pause right now in which there's kind of a disconnect between what buyers think prices should be and sellers are feeling like, hey, we're good, like, Beau, if it doesn't sell, no problem. I'm going to sell it for even more when you call me 6 months from now.
And that's pretty much the case. I think you've got a point there. And, folks, I'm buying as well. I'm selling as well. There are interest rate pressures right now. And if you made a deal 100 days ago and you're still sitting under contract, you might be sweating a little bit right now. But, to Beau's point, yes, a lot of sellers have the ones that there may be some who have to sell, and if they have a loan coming due, maybe. But a lot of times people build in extensions. So the have to sell mentality is not really there. So as buyers, how do we approach this situation? I mean, how are you seeing successful groups in your world who are, still doing deals today? How are they looking at the outlook? Are they saying, "Oh my God, It's, I've got to get the cash flow, the interest rate, I've got to figure this out," or like, how are they looking at things? Because people are still doing deals.
So I'll tell you how most people are looking at it who are not getting a lot of deals done, and then I'll tell you the ones who are. The ones who are not getting a lot of deals done are the ones who are taking advantage of current interest rates by using an even higher exit cap rate. Okay, so what the normal buyer is doing is they're saying, well, Beau, interest rates are 5.25%, 5.5%. And so when I'm plugging that into my pro forma, I'm not going to plug in a lower cap rate, Beau, than the interest rate that I'm going to exit at. I'm going to put in 5.5 or 6, right? Well, that kills all IRRs, right, on your exit. And they don't move forward. So what they're doing is, that's, of course, killing the price they can offer. The reality is the following, and I'm known for doing a lot of polling on LinkedIn because I have a large following, and so I usually have a lot of votes, which makes the validity of the votes good, and all of my connections are either real estate investors or brokers or lenders, but most of them are investors. And in my polls, I have found the following. 92% of investors have control of when they sell, okay? And then so you got 92% can sell. And then I did a poll recently, and the overwhelming percentage, I think it was 76% of investors, felt like interest rates under 4% will be back again in the next several years, right? But the same investors are using higher cap rate exits than today's interest rates, which makes no sense. So the ones who are really in this to win it, the ones who know they control their exit, they're not going to sell in 5.5% and 6% interest rate environments, unless the world's going to hell. They're going to think logically, okay, I'm going to sell in a 5 cap environment or a 4.5 cap environment. And so they're still going to use normal good exit periods. Because if you have control of when you exit, you're going to exit when it makes the most sense, right? So I would just, now, listen, I mean, depends on the property, obviously, right? If you're buying a 5.5 cap type property that is not in the pathway of development, doesn't have a whole lot of value add, is more like a C type asset, yeah, maybe you're using that. But if you're buying B and A class assets, I think you're just shooting yourself in the foot because the seller isn't hearing you. Okay, they're not saying, you know what, that does make sense to use a higher exit cap rate than the interest rates. I'm going to go ahead and lower my price for you because that makes sense to me. It's not happening, right? So you're still trying to win the deal, right? I'm not saying get uncomfortable. I'm not saying to have sleepless nights for the next 5 years, but just keep that in mind that just because you and everyone that you see on LinkedIn is using exit cap rates higher than the interest rates doesn't mean they're winning deals.
Yeah, that makes a lot of sense, Beau. And I think you said something very important there, that the overwhelming majority of sellers control when they sell. The only time in this business you get in trouble is when you run out of money or you get forced to sell or refinance, right? And so most people, and I'm not going to say there aren't any, there are deals out there, and this is all the time, right? There are deals out there where they are on a timeline, something's going wrong, they have to
but
sell,
that even a higher cap rate ain't going to save you. If you've
Probably
run shit that bad in this world where it's a 3% vacancy world anywhere, if you're remotely good at what you do,
there you go.
And you ran it so bad that your 30% equity that you bought with and double-digit increases in rent increases has now put you in a place where you don't have a savings, a 5.5, 6, 8 cap underwriting ain't going to save you.
That is very true. That is very true. And I think it comes down to the fundamental, supply and demand macroeconomic situation here, right? At the end of the day, the sellers we have today, the choice is, okay, I sell at a number that makes me happy, and my investors happy, whoever you're making happy, or I keep making, I bet on myself and I keep making double-digit rent growth for 2 or 3 more years until the interest rate environment is better, right?
Right, and then you're going to have to pay more for it.
Case in point. Then you have to pay more for it anyway. So, and this is all about going after desirable assets. So this is good. Well, Beau, to segue a little bit, you've written a certain book that I'd love you to highlight a little bit, and I want to ask some questions from that book, that'll really help a lot of our listeners who are playing in the market today. So first, tell me about the book.
Sure.
Tell me about, what it's kind of geared towards. It's a very unique piece of authorship.
Yeah. So in January 2021, I wrote a book called Multifamily Investors Who Dominate. It's an inside look at how the most elite investors transact real estate or transact apartment deals. And what I've found is over the last 20 years, I've been following very, very elite investors, folks who do way more transactions per year over a long period of time. And they're very different from a lot of investors. A lot of investors will do 2 or 3 deals a year, which, by the way, is still fantastic. But I'm talking about guys who are doing 10, 15 deals a year, 15, 20 years straight. They're the source of every broker. Every broker brings them deals early. And they have certain characteristics. The book came out and it was a great success because there's nothing out there on the market. All the multifamily books teach you how to underwrite, how to do the loan part of it, the operations, the management, right? This is literally like a backdoor inside look, the discussions between brokers and sellers and how we choose buyers and who we take the deals to early. And so the book has two components. One is that networking with brokers and building your reputation with those brokers is the number one source of all deals. So I did a study a few years ago, and it was a 5-year study where it determined over 90% of all transactions over 10 units are done by a broker. All the ones that are off market, on market, all of them, there's a broker involved over the 90% of the time. So if you spent most of your time, instead of trying to get a seller to sell to you directly, befriending every apartment broker, even the ones you don't like, to bring you deals before it even hits the market, then you'll be flooded with deals. And the second component of the book is how you develop that kind of reputation. And it talks about how widespread and how fast the word of mouth travels regarding how you operate before, during, and after a transaction. There's all kinds of examples and stuff in the book that'll be entertaining and really kind of pull you in. And you'll start to see, oh yeah, like, gosh, I remember I did that one time on a transaction. I probably shouldn't do that again. Or wow, I'm glad I did that one right? But there's a lot of things that investors do just through ordinary transactions that can cause bad reputation, and they don't even know what's happening. And so brokers talk to other brokers. We get each other warnings. Brokers talk to other investors. Sellers talk to other investors about what you did. And so it travels, right? And over a course of just a few years, because it's such an extremely small world that we're working in, right? Your reputation gets hurt, and you see less deals.
So what I love about this, it's kind of a tactical book in emotional intelligence of, the people operating in this space. And I think you said it in our last try at this, there's a lot of egos in this space.
Yeah.
There's a lot of people who are used to high performing individuals, and we have two kinds of investors. I feel like some that are very what's the right term, anal and numerical, and some that understand the big picture.
Yeah.
And so leading into that, give me some tips here on how does one, because we're simply not going to win a whole lot of deals by sending, letters to sellers at this level or bandit signs or things that a lot of people think will work to generate off-market deals. You're going to have to, get on that short list of people who get sent these deals.
Right.
So what are some tips, tricks? Like, how do you get that reputation, to make the short list?
Yeah. I mean, the number one thing is close on more deals, right? That automatically, and it's a catch-22, right? Well, how do I close more deals? But what I'm saying is once you get your first deal closed, right, and you get letters of recommendation from that broker and from that seller, and you hold on to them, right, and you're showing them on the next deal, right? So in the next deal, you win it, you close on it. Now you have a couple of, and so once you close, it starts getting easy. How do you get to the point of close, right? So it's in the book, one of my sections is I train on how to automate contact with the brokers. So what most folks do is they call the top 20% brokers over and over again, right? The 80-20 rule. So in my market, I cover the northern half of Florida. There's roughly 60 multifamily brokers. So the 12 of us, or 20%, do most of the volume. And the 12 of us are the ones who get most of the calls from these investors, right? But there's another 48 brokers who do 2 or 3 deals a year, or 4 or 5 deals a year that don't get many calls. I'm saying you're communicating with all of them, and you automate it in a CRM. So I literally teach in my book, buy a CRM, like a contact management system that's on your computer that manages these relationships. You're saving all the contact information about the brokers in there, email addresses, phone numbers. Over time, you learn who their spouses are, what their kids do, and what their hobbies are, and you're building these relationships, and the CRM is holding all these notes, and you're scheduling the next time you're going to have a contact with them. I, in the book, talk about you don't want more than 60 days to go by where you're not reaching out to every broker. And so you break up the cadence. If there's 60 brokers and you're doing 60, every 60 days, you only have to call 1 or 2 brokers a day. And you're just checking in with them. You're trying to add value in their business. Tell them about the renovations that you're doing and how much they're costing. Tell them about an amenity that you just put in that you're able to raise rents on, right? So you're adding value to us. We fall in love with you for that because that's great information for us, right? And we have some personal talk. We build a relationship. We build a friendship, right? And so you do that every couple months, year after year, and you're closing on deals with other brokers and me and other investors, and you're building the same relationships with the lenders and your attorneys, and all these folks talk, right? And you're just adding as much value as you can. That's who we think about as soon as we get a call from a seller. So almost everyone is only talking to the top 20%, and no one's automating the process, right? There's no way you can remember 60 brokers and what they said to you and personal things about them and the types of deals they do. But a CRM tracks all this stuff, right? So when I go to call Chad Sutton, the broker, next time, I already know about the conversation we've had, the talks that we've had. I know the types of deals we do. I already had things I can reference on the phone call. This is a people business, man. It's what it's all about. It's why as a broker, sometimes I lose listings to a residential agent who has never sold an apartment complex in their lives, but the seller was friends with them, or they were neighbors, or they're church members, right? And it's the same thing between brokers and investors. We're looking, number one, to do deals with folks who have, we automatically think that you're going to be qualified, or you wouldn't be in this, that you're qualified, that you've got debt and equity set up. The number 2 thing is we got to like you, right? Because this is like a 90-day marriage, right? I'm going to be in due diligence with you. I'm going to be in closing with you. We're going to be in the foxhole together. And so it's a big component of it.
Yeah, that's right. And by the way, the saying "I do" or the good part doesn't come till the end, right? So you're putting your faith in someone for 90 days and your paycheck, quite frankly.
That's right.
And your reputation and everything. I think we talked about this before as well. Everything, the buck stops with you as the broker in the seller's eyes. Like, they are trusting you to put the right buyer in place, to market the deal, to find make sure you touch the entire market or at least a big enough subset of it. So they're putting a lot on that relationship. And so it's amazing what you said there. So you have to be a little bit of a people person. You have to actually build a relationship with people. And then you have to do what you say you're going to do. If you say you're going to close on a property, and if you say you're going to arrange this debt, you say you're going to close in this timeline, you got to get a reputation for doing that, and not just doing it, but doing it cleanly.
Yeah, closing with reputation is the number one goal. It's what the book's all about. It's what all the conversations should be about, because there's a lot of folks who close on deals, but they were absolute nightmares. They were absolute bulls in a china shop, and they think they did okay. Oftentimes what I see is the folks who are bulls in a china shop don't know they're bulls in a china shop, right? They close, but then they stop seeing deals, right? And the brokers and the sellers don't go up to those buyers, and say, hey, the reason you haven't seen something from me in 2 years is because you remember that one transaction we did together and you retraded $50,000 on a $20 million asset? Yeah, I don't ever want to have that conversation with my seller again.
So that's an example. And clearly you have some war stories here. Give me a couple. What are some just moronic things that people have done that give you that bad reputation? I mean, that's an example. Like if you're retrading. Yeah, I mean,
retrading always. Retrading is probably the most annoying part to any broker or seller when it's done improperly. And most of the time it is. And so the example I use, I can use that one as an example. Say you're buying a $20 million asset, and you find something during due diligence that's not your fault. It's a seller issue. Whether the seller disclosed it or not, it doesn't matter. You find a $50,000, $100,000, $200,000 issue on a $20 million deal, right? When you plug in $200,000 in your pro forma, so instead you're buying it for $19,800,000, I'm telling you, your IRR and cash on cash doesn't move. I mean, it's literally less than a point. It's probably like a half a point if I just set up a pro forma and then change the price by $200,000 on $20 million, right? But you're willing to put your reputation on the line as the investor with the broker, the seller, the property managers who are watching to see if you back out. You know, the phase one guy finds out about this. I mean, all these people are like, they check in with the brokers and the investors. Hey, that deal ever go through? No. He backed out over $200,000, right? But the investor who does that, they don't see the big picture. They don't see that they just lost 32 deals from that one broker over the next 20 years, right? That 32 deals that matched his criteria over the next 20 years, never sees him again, right? He's just thinking about, I found a $200,000 issue. It wasn't my fault. It wasn't disclosed. That's the seller's problem. Principle of the matter, the seller should take care of it. It's not what you want to do. Think with numbers in that situation. And if you think with numbers and don't retrade for something like that, then you do the opposite. The opposite, the broker and the seller love you because you weren't petty. They want to do more deals with you. When you close, I as the broker, I want to go to the seller and say, hey, Mr. Seller, what a great transaction we just did with Chad. I see that you own Lexington Apartments over on Main Street, very similar to the one we just sold Chad. I don't need the listing. We don't need to take it to market. Let me take it to Chad real quick. Maybe he'll pay you a good penny for this one too. Would you mind if I do that? Yeah, actually, as a matter of fact, I like Chad. Only show it to Chad. I don't want this on the market, Beau. And we do a deal, right? Easiest freaking second deal in the world. But I can't do that. I can't even think about doing that. Or if 4 years from now that seller goes to sell and you turn in an offer and you were a prick, he's going to remember that. It's a small world, right? Other things I see. Go ahead, I'm sorry.
Yeah, well, I was going to ask you a tough question, but I want to hear what you were going to say first. Other things you see. Let's keep on this.
So other stuff I see is, so that's during a transaction. I mean, we can rewind all the way back before we're even under contract. One of the annoying things that brokers get a lot is, we'll come out with a listing and, buyer will get the listing from me. They'll call out to Beau, this is way overpriced. I mean, this is nuts. This is nuts, right? As if this is the first time I've ever priced an asset, as if I've never sold anything before in my life, right? The reality is that brokers and sellers in this world that have access to thousands of data points on sales, cap rates, gross rent multiples, dollar square foot, rents, all this. I mean, there's so many data points that the range of prices that things trade in is very narrow. It's pretty in there. And secondly, how many times have you seen a deal come to market in the last 5 years that didn't sell, right? It happens, but as a percentage, it's so small that you damn sure don't want to be saying your price is too high, right? Because we remember that. I go in my CRM, I type in some notes. Yeah, third time Chad called me and said my price was ridiculous. Oh, by the way, I sold them all with 17 offers, right? So it's like, if the deal doesn't work for you on price, the proper way to do it is, again, you remember, every interaction you want to have with the other investors and brokers is to leave with reputation in mind, right? So if you were the broker, how would you want to receive that rejection? I would like to see someone say in an email, hey, Beau, thank you so much for sending this to me. Your package was great, had lots of information on it. Please tell the seller, great looking property. I love those annual flowers on the front. I love how they redid the pool pavers. You're definitely going to sell that. I have no issue. The returns don't work for me, but that's the exact kind of property I'd like to see. Keep me on the list. I'm always going to give you fast feedback. It's saying the same thing, okay? But to think you're going to say, that's an overpriced listing, and then I'm going to go, damn, Chad, I never thought about that. You're probably right. The 5,000 data points I have that tell me this is the price, you're probably right, though. Let me make an adjustment on $1.8 million to get in line with what you're telling me. It's never happened in the history of the world, right?
That's awesome. And the funny thing about that is that, beauty is in the eye of the beholder, Bo, right? And so it's like if you show 10 different groups the same property at the same price point, you're going to get 10 different responses on whether
Absolutely.
that's too high, too low, or just right. It's like you have someone who is coming out with this color of money, or someone who's syndicating with all these tranches of equity to pay, or someone who's just a big fund and had to place $10 million yesterday, and that money's just burning, right? Everyone has a different idea on what price is, and this is the epitome of supply and demand. These are sought after assets. If we're talking about Class A, Class B, multifamily assets in prime locations, these are sought after assets. They're growing rapidly, and there's a lot more money looking for them than are properties to buy. And by the way, there's a lot more tenants looking for properties than there are properties to rent. That's kind of the whole nature of the situation. So it makes perfect sense. I love that aspect of it, where it's like, hey, just be a little more personable with your answers here. Yeah. Don't be a prick to the broker.
Be like
to the seller,
you're at a bar having a beer together, and you're like, and you wouldn't say, "Bo, that's ridiculous. That price." The reality is the price is too high for you. Okay,
for you. There you go.
But making the general statement, which is all the time, by the way. I mean, people do it in different ways. I mean, I'm doing it. We're live here on a podcast, right? So you can see my facial reactions and so forth. But the reality is it's usually in an email or a text, or sometimes we're on a phone call, and they'll just it's never going to sell. That's never going to sell. Okay. Tell that to the 74 signed confidentiality agreements I've gotten in 48 hours.
Fair enough. All right, so I'm going to ask you a tough question now, because we're in an environment, and when this has been recorded, we're probably 4, 5, 6 rate hikes in. I'm not sure. We're in July. No, we're in August. Good grief, of 2022. Rates have been moving since January. So there have been a lot of situations, and I'm not advocating for or against, I'm just stating a fact. There have been a lot of situations in the last 3 months where a lot of deals were under contract and they wound up being retraded. Even, we prefer the term recalibrated, I like the term retrade. It's a bad way.
Of course.
Yeah, but the point is, even people who were being conservative and realistic with what they thought debt market was, maybe they were assuming, okay, we'd be 4.5%, 5%, 70% leverage. All of a sudden they come back and they're at 60% leverage and 5.5%, or whatever the answer is. There's some expectation and then some reality. How do those conversations happen in the best way possible that keep in mind the outcomes that the seller and the buyer need? I'm sure you've had people approach that with you in a very negative way, and some approach it in a very constructive way, and deals still get done. So what say you on that? That's a tough thing to answer, but. Yeah, no,
and listen, that I mean, first of all, that period of time has ended. I think there might be another one, right? When there's another rate hike, when there's another
after
one,
they drop it,
and deals get caught in that time frame, assuming, like right now, we already know there's another one coming, right? So you can plan for what that might be in your underwriting, and therefore could not use that as an excuse unless it was way above what the feds have already been calling out, right? But to rewind to the time period in which it went up above what we all thought, and all those deals that were under contract, go ahead.
I was just saying, when it was a surprise. Let's go back to that time.
When it was a surprise, that's fair game for a retrade talk, right? Because it was significant. I had 3 deals under contract, right? 1 of them went away, 2 ended up closing. And we just had conversations. Those are such monumental changes that a seller's not offended, okay, when something goes up 3/4 of a point or a point during the due diligence period. They know they need to have a discussion. And the discussion is very, very simple, actually, in those terms. The seller is either going to, accommodate, and we're going to negotiate something in the middle that works, or the seller's going to say, hey, I get it. I don't blame you, buyer. I would do the same thing. I'm just going to hold on to it because I think this is going to cool over, and I'm going to come back to market in a year, right? And that happens, and that's the way it is. But that's not a gray area. When something significant like that happens, it's an easy open up for discussion and negotiations between broker, buyer, and seller, and try to save it or not.
Yeah, and I think
because that ain't a $200,000 issue on $20 million. It's a much bigger deal.
That's a much bigger deal. It could be, double-digit percent.
It's one the seller cannot avoid, right? Like he's going to have that issue with anyone. It's not like when the buyer who's under contract and says, hey, I need some help on price, interest rates just went up 0.75 points. It's not like I as the broker and the seller can decide, hey, Mr. Seller, let me go to these other 9 offers and see what we can do, right? Because all the other 9 guys are in the same boat.
Yeah, absolutely. And so I guess the idea would be approach that in a constructive manner and say, like, how do we get this done, rather than, oh, my God, he's got to drop his price. It's way too high from this environment, and just start attacking the seller, right? So,
that's right.
Very good.
That's right.
Okay. Well, this has been fantastic, Beau. We're going to have you back on just in a couple of months and talk about what's going on at that point. You have a lot of great insights. I appreciate your knowledge and experience here. What I'd love to do before we end the episode is go into the Quattro Trio, a couple of questions we ask everybody on the show. Are you ready for that little lightning round? All right.
Let's do
First one, Beau, what is your superpower in this business?
It is getting, it's easy. For me, it is getting 2 parties to become empathetic for each other, right? So every single deal that's ever done has something come up. Some sort of hair happens. And, the middleman, me, needs to be able to help the 2 of them not rip each other's throats out, right? So I help one guy, instead of wanting to rip the throat out on the other one, help him see, okay, here's what he was thinking. Here's where his head is. Let's understand each other. And so I'm pretty good at kind of being the psychologist, if you will, and being a little more empathetic. And that's what I'm best at.
It seems like you're high in emotional intelligence, Beau, which is pretty important in an ego-driven room. So that's fantastic. I don't have ego, so I don't know what you're talking about there, but it's good, Anyway, question number 2. So we've heard a lot of reasons that you're really awesome in this business, Beau, but give me some dirt, man. What is your biggest failure in business life or industry, and what did it teach you?
Oh yeah, I would say when I was coming up in the business early, I didn't understand the power of working with the wrong people, right? Like low reputation people. So, newcomer in brokerage, you just want any deals. You take on any business, right? And so eventually you come across folks who are bulls in the china shop, right? And they say the wrong things, they do the wrong things, they're coarse, they retrade. And so, but they would do deals, right? So I'd do some deals with them, and what happens is that kind of stuff rubs off on you. Even though you aren't the person doing those things, you're just the broker, the world starts to kind of associate you with that kind of investor, right? And so early on, thankfully, I learned that very quickly, that life's too short. Get the haters and the bad people out of your life so they don't rub off on you. Same thing with investors, like bringing on the wrong partners. There's a lot of investors now who I love the principles, but they've brought on some really difficult people to deal with on the acquisition side or the disposition side, analysts. Maybe they've brought on a third-party attorney or an in-house attorney, and they're just intolerable. I would rather not work with them or bring them any deals, right? It's the same thing. You got to watch who's on your team all the time.
Absolutely. I mean, and they're a reflection of you, right? Everyone on your team is an extension
That's
of
right.
you. So fantastic. Thank you for that. Last question, Beau. So one of our 4 pillars here at Quattro is philanthropy. We love to give our guests on the show an opportunity to just mention, what is your philanthropy of choice. A lot of times our listeners will contribute on your behalf. So, what philanthropic venture do you tend to support?
Yeah, I mean, I'm on the children's cancer thing. That's my. You had the website. I think you pulled it up before on there that you can put down in the link. But to me, it's the worst thing to ever see. So I'm always cognizant of that.
Beau, I married a girl who works in children's hospital world, so a lot of really sick children, and it's incredible. Like those kids, they can't help the hand that they're dealt, and so I agree with you. Any money we can put into that, it's just you're giving them a chance at life. People in an adult hospital, they've usually done it to themselves, not always, but usually. But kids, they're just dealing with the hands they're dealt. I love that. All right, Beau. Well, it's been a pleasure having you on the show. What's the best way to get in touch with you?
3 ways, man. I got a website, beaubeery.com, BeauBeery. On there, I have a lot of really great stats on the multifamily market. And you even want to visit the markets that I cover, even if you don't buy in them, Because if you look at the kind of information I have on there for those markets and you can master that information for your markets, it makes you react faster to deals. The number 2 way is you got to buy my book, The Multifamily Investors Who Dominate. It's on hardcover on Amazon, it's on Kindle, and it's on Audible. And, listen, I don't make a bunch of money selling books. I'm just telling you this is really good inside look stuff. And then the 3rd way is I've got a YouTube channel called Beau Knows Multifamily. Got a bunch of stuff on there for beginners, advanced level investors. I've got analytics on there, all kinds of cool stuff.
That's awesome. So y'all pick a way to get in touch with him or listen to the awesome content he's put out or check out his stats. There's a lot. Beau is everywhere. Beau Knows Multifamily and Beau is everywhere. And by the way, all of this, just scroll down in whatever modality you're watching or listening to this in. It'll all be linked below for your convenience. So you can follow Beau, you can check out his videos, you can get his book, and you can even go contribute to the wonderful philanthropy we talked about before. So Beau, man, thanks for coming on the show for a second time in 2 days to record the right way this time. I appreciate it.
I appreciate you sticking with it, brother.
All right, everyone. This has been another episode of the Real Estate Runway Podcast. Until next time, over and out.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.